Everyone. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Well, thank you, Shelby.
As we're talking about the grain market today, looking internationally and domestically, however, starting off domestically, looking at the wheat market.
Yeah, of course, with harvest fast approaching in Kansas and having begun in southern parts of the U.S., we're wondering where prices will go in terms of the short run. So here this report lands, and really across the board, pretty mixed response. Wheat down about 3.5 cents on the July contract, not a lot of change. And corn for July up 1.5. Soybeans down about 8.25. So really not a lot of response really to anything there. When you look at wheat in particular, the USDA did come in and acknowledge the strong pace of exports, of U.S. exports that we've had of late, both overall for all U.S. wheat varieties and in particular also for hard red. Now, we'll talk a little bit later when Guy comes back and this later on the show and talks about currencies and freight rates, et cetera, as to some of the factors that might be affecting that. But what the USDA did was to raise the projected export number for this 25-26 marketing year, which began which will begin on June the 1st. So we're in it now. Raise that projection by 25 million bushels to give us a ending stocks figure now 25 million bushels lower, down to 898 million, 45.3% stocks to use for the U.S. And we're still sitting on ample supplies of hard red winter wheat in Kansas. We have a stocks to use projection of just about, 62% stocks to use. So domestically for hard red winter wheat in the United States, for every 100 bushels that we're projected to use of wheat right now, we have ample supplies. Basically, 62 that we're projecting will still be around at the end of this marketing year, come May 31st, 2025. Guy, how does I guess I'd throw that over to you. What do you see happening in the wheat wise in the world markets?
Well, in the big wide world out there, world production's pegged at 808 million metric tons. That's up 1% a year ago, and that would be a record wheat crop globally. And I think that's reflected in the carryover number you're looking here at ending stocks in the U.S. Just to run through some of the major wheat producers, starting off with India. India is kind of an interesting situation. They're projecting to have a record wheat crop in India of 117 million metric tons. That's up 1% from a year ago. And in conjunction to that, a commodity that competes with wheat, particularly in South Asia, is they're looking at a near record rice production, second highest on record at 150 million metric tons. So India can either be an exporter or an importer. At the moment, they've got sufficient supplies. They're building stocks. Don't necessarily think they're going to be a big exporter at this point in time, but they definitely won't be sitting in that import situation. Another situation, China, another big wheat producer over there. Imports are pegged at 6 million metric tons with an estimated crop of 142 million compared to 140 last year. Now, I just got back from China. Some of the discussion over there, and you're seeing it in the trade, is with some dry weather, that crop could be down 5 to 10 million metric tons, and that would lend itself to be maybe a little more optimistic on the imports, but we'll sort of see.
If I can, and if I can add in on China, 2 years ago, stocks used at 87%, 84 and a half. The last marketing year now projected to be 82 and 82.5%. But what you're saying, if usage is unchanged, the crop drops off, then that could drop below 80% to 70, and that would catch the world's attention, I would think.
Yeah, it's look, with those big ending stock numbers. I don't know if they'd have to reach as far as the U.S., but at least it's potentially a bit more business there. in China. So we'll see. Just looking at those major exporters, looking at Russia, a lot of these numbers were unchanged, but Russia's up 3% from last year at 83 million metric tons. Export projected at 45, up 1.5 million. Ukraine at production at 23 million metric tons, down 2%. Exports at 23.4. You put those two together, exports are exports are expected to decline by 2 million metric tons, down 3%. EU production just slightly higher, 136.5 million metric tons versus 122 last year. Exports pegged at 34.5, just up 500,000 metric tons. Our neighbors to the north up in Canada, production at 36 million metric tons, up slightly from last year at 35. And our friends down under on Australia at 31 compared to 34. Some dry weather in the southeast has knocked that crop back a bit, although they have had some recent rains. And Argentina is up at 20 million metric tons compared to 18.5 last year. So we look at ending stocks for the major exporters. This year we're looking at 10.6, just down slightly from last year at 11.2% stocks to use, and then 23, 24 at 11.6. So look, we are tightening stocks up a bit for the major exporters, but I'd say they're not critical at all.
What are we seeing then for the corn market?
Really, the story in the corn market is it continues to be, for the most part, what lies out ahead of us. We've got all the production uncertainty that will be that will have to deal with in July and August. USDA kept steady state in terms of their projected yield, 181 bushels an acre. There will be a potentially important report at the end of this month. It'd be the USDA acreage report that could come in and impact the supply-demand balance sheet. And again, with the way the USDA handles their yield numbers, they'll probably take 181 bushels an acre, and they'll take whatever that acreage report tells them, higher or lower than current projections, and go with that. One thing that did happen is that the strong pace of exports that you and I've been talking about, Shelby, for the last several weeks really showed up in the old crop supply demand balance sheet, the one for the market year that'll end August 31st. The USDA raised that projection to by 50 million bushels up to 2.65 billion, and that, of course, they took that 50 million then off ending stocks. So now for this old crop marketing year, we're down to projected ending stocks of 1.365, and when we've been down at 1.365 billion bushels of stocks before, those are some pretty high price years. But that was last year. So now here we got down to that at the end of the old crop year. We're projecting for the new crop year, taking that 50 million and just cycling it through 1.75 billion bushels carry out, and that's down from 1.8. So, Guy, it's kind of a conundrum to me. And when I look at the corn supply demand balance sheet, we're at 1.75 billion, and not anticipating. We're not seeing the market respond in a high way. The ending stocks to use domestically still at 1.3% stocks to use. Old crop down to 8.9. But these ending stocks numbers aren't that far away from where any weather risk that could come in and affect the U.S. crop in the coming months wouldn't bring a sizable response. So that kind of sets the stage then for what you see internationally, Guy.
Yeah, no, I think you're exactly right. Corn, and for some time I've been a bit optimistic that corn would be the leader in any particular rally here, giving its tightness both in the U.S. and internationally. Just to look at the whole coarse grains complex for the moment, internationally, ending stocks for total coarse grains projected to be down 3 million metric tons to 302 million. That's 11 million metric tons declined from last year, or from this current marketing year.
And 2 years ago, it was at 347 million. So we're not just dancing around with lots and lots of coarse grains around the world.
That's right. And then looking at corn more specifically, ending stocks at 690 million metric tons. That's down 2.2 this month. Oh, sorry. Yeah. That's a 10 million metric ton decline from the prior year. So it's we are tightening corn up, and that's with it's not a record crop, but it's a near record crop, and we're seeing just good demand from the livestock sector, particularly in that, which has been a quite good residual strength there. Looking at global trade and exports, they're pretty much unchanged. One thing I'd comment is that wheat feeding is projected to be about a million tons, just under a million tons higher at 152 million metric tons. China's estimate of wheat feeding at 33 million metric tons. So, look, we've got wheat prices down to where they're pricing itself aggressively into that feed ration on that. So that's why I don't see much downside to wheat, and any rally there's going to be led by corn.
And Guy, if I can add in internationally, what do you think of Mexico? Because when I look at what's happened the last 3 years, the stocks to use figures are tightening up. We were at 12.6%. Two marketing years ago, 11.83, and the one we're still in projected down to 11.53. And Mexico's a big player in terms of our shipments and closeness, and here in North America. Any thoughts on the Mexico trade?
Yeah, look, the Mexico trade, they'll come in as our number one buyer of corn this current marketing year and continue to see that. It's been dry down there, but also we're seeing good domestic demand there. Now, there's some political things that need to be addressed on this non-GMO issue. It hasn't gone away. So it's, we hope they just, well, it would be nice if Mexico was sort of a seamless market to the U.S., and there really isn't any reason that it shouldn't be. But we have some issues there on trade that we do need to work out. But it's good to see them there every day in spite of that. So I didn't run through the major exporter ending stocks numbers this year. It's down to 3.65% from last year at 4.7, and year prior to that, 23-24 at 5.4. So that just shows you that tightness in those major exporters. And it wouldn't take much of an event, I think, to rally that corn market.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Dan and Guy as we continue our grain market conversation.